Joining us tonight, a heavy hitter from the heady world of venture capital in the high-tech and digital media space. Chang is principal of Norwest Venture Partners based in Palo Alto, where he muses on investments in mobile, gaming, digital media, and also leads NVP's investment practice in China and Asia Pacific. Now, Tim was named on the 2011 Forbes Midas list of top VCs, and his venture investments have generated more than $1.3 billion in M&A exit value. And Tim joins me now. Welcome to the program.
Thank you. It's a pleasure to be here.
Now, look, we're just hearing today that Citicorp has been under cyber attack with hackers accessing data from 200,000 bank card holders. This is, of course, hot on the heels of Sony's breaches recently. What is the future of cyber terrorism, and could it actually impact on the advancement of all the areas that you're interested in?
It definitely could stymie some of the confidence of consumers in their, habits of buying things online. If they feel that having their credit card information, their profile information out there is susceptible to cyber attacks, if the market loses confidence, that could definitely hamper confidence in e-commerce.
And when could that be? I mean, if 3 or 4 of these attacks happened later this year, would that do it?
It would certainly potentially do it if the biggest platforms, say Apple iTunes or Amazon or many of the e-commerce sites that we use all the time, if people lost their confidence in those platforms, that could be a major setback.
Well, let's talk about confidence. Social media has brought us extraordinary success stories. Twitter, Facebook, LinkedIn, the names go on, closely followed by extraordinary valuations. Are they justified?
Well, it depends. They are pretty rich right now when you look at multiples on earnings and sales. LinkedIn is one example. People said, hey, how can these PE multiples be so high? However, I do think the market places a premium for clear category leadership, because if you believe that those advantages of these platform leaders can be sustained, then you can also believe they could grow into those valuations in the future. Case in point, you wouldn't have to imagine too hard for Facebook to be someday worth $100 billion based on that social graph they have. I don't think anybody's taking that away from them anytime soon.
Where is the money coming from, the investment money that pours into these sort of assets?
Well, once you reach critical mass as a category leader, there's almost infinite pools of capital to tap into. Everybody from hedge funds, private equity funds, late-stage venture funds, everybody wants a piece of a category leader.
And East and West.
Oh, yes. So you'll find investors from Russia, like DST, hedge funds from the United States, from Asia, capital from all over the world want to pile on to the leaders once they hit that critical mass.
And which of these companies, and indeed is it easy to assess, which of these companies are going to be best at monetizing their value?
Well, here's the difference from the prior bubble from 10 years ago. It was all about, let's just get lots of eyeballs and we'll figure out how to slap ads against it. These days, though, many of these category leaders, these big 5 companies, the LinkedIn, Twitters, Groupons, Zyngas, Facebooks, many of them have solid business models based on transactions, commerce, selling things. And they're actually profitable beyond even just trying to do advertising.
But profitable in real value terms, but compared to their overall valuation on paper, it's nothing, is it, even now?
Well, to be fair, the valuations have been frothy lately. So if you were to take absolute PDE multiples, they can be very high. So the market could be seen as giving them advanced credit, maybe even 2 years forward on what they think they'll grow into. But again, some of the strongest companies like Facebook, like LinkedIn, I think that their business models are pretty sound and the growth rates are extraordinary. So they're being rewarded for almost exponential growth.
Now, Tim, you're fluent in Mandarin, Japanese, Korean and English, and presumably you read websites in all these different languages. Does the East look at these sorts of investments in different ways?
Well, what's interesting is for the East, that has been the growth story of the market lately. Everybody has been hot on China IPOs that have been going public on the U.S. exchanges until recently, with all the accounting scandals and the financial questions that have come into bear. Confidence in some of those companies has been shaken. So that is becoming a mixed blessing. People still believe in the macroeconomic growth of China, but people are wondering, hey, is this too good to be true?
So to sum up, is there a bubble, and could it burst, and if so, when?
You know what? To have a bubble, you need irrational exuberance across the board. I think there's still too much unease and uncertainty about the macroeconomy in general. You've got little pockets of growth, like the Facebooks and the Twitters, but it's not that every company is irrationally valued, and that's why I don't think we have enough inflation yet to make a true bubble.
Tim Chang, thank you very much for joining us tonight.
Thanks for having me.